Well, as you know, it's important to diversify your overall investment holdings to balance risk versus reward or risk versus return. And so that's where you have different asset classes like stocks and bonds and cash and precious metals, maybe like gold and silver and whatever else you might have invested in, the real estate, whatever it might be. You have a variety of asset classes that you're investing in. Now, within each of those asset classes, you want to have a variety of assets within that. Maybe you have some bond holdings. You want to have maybe short-term bonds and medium-term and long-term bonds and maybe government bonds versus corporate bonds. There's a whole bunch of things you can do with just bonds. But this is a stock investing course, so let's talk about stock. So not only is it important to have a diversified portfolio of these different asset classes, stocks, cash, bonds, etc., you want to diversify your stock holdings too, whether they're individual stocks or mutual funds or index mutual funds or exchange traded funds, whatever it might be of your stock-based holdings, your public stock-based holdings, you want to diversify those as well. And there's a variety of ways to do that. Really three big ways that we're going to look at to really diversify. And then within those classes, you can hold a whole bunch of different types of securities or equities or stocks, all mean the same thing, so that you can have diversification within each of the categories. But to start, the three big things you want to look at is how am I diversification? What types of things do I hold in terms of size, style, and sector? And so what we mean by size is probably what you think. How big is the company? Is it a large company versus a small company? And in the next lessons, we'll look at the differences between like a small cap, mid cap, and large cap, or capitalization, a small capitalization stock versus a mid or large capitalization stock. And what does that mean, and how do we evaluate stocks based on their size? Next, we want to look at also how do we evaluate stocks based on maybe their style or style factors like, where do they fit? You probably heard the terms like growth and income, or maybe in value, right? So if it's a growth stock, maybe it's a high technology stock that's on fire and they're growing like crazy, well, that's a growth stock versus maybe a 100-year-old company that pays a great dividend that might be a value or more of an income type stock. And where does value come in as far as, is it overvalued or undervalued, and is there a way to have a value-based strategy? And there is. Also maybe where they're based, domestically or international, is another way of style and breaking up the style, whether it's a stock, a mutual fund, ETF, whatever it might be. And lastly, a sector. What sector does that stock, is it related to? Now think of it as like an industry, right? So if you're looking at ExxonMobil, a big natural or oil and gas type company, well, they're in the energy sector. That's what they do. Versus, let's say, Coke and Pepsi, which are beverage makers. They do other things too. And that's the thing where it gets a little weird sometimes. You have to dig a little bit, but they're primarily a beverage maker of soda drinks or carbonated beverages. Where I come from, we actually call them pop. So every culture might have a different way you might call Coca-Cola or Pepsi, but they're all within sectors. If you have a bank, that's in the financial sector, and then even within the financial sector, it can break down from there. Or the healthcare sector, you can break it down into subsectors from that. So for example, let's say healthcare, you have healthcare as an overall sector, but then within that sector, you might have things like hospitals is a subsector or a subunit, and then you might have pharmaceuticals, people who make drugs. Drug companies are pharmaceuticals. You have nutraceuticals, which is like nutrient type things and base things around that, or medical devices such as heart stents and valves and things like that that are more of a device to treat people versus, let's say, a pill or a drug like a pharmaceutical company might make. Or how do you do insurance? Maybe you have managed care or different types of health care that might fall under that overall umbrella of healthcare. So, and then there's also things like biotechnology. Biotechnology stocks and things of that, like Amgen. So there's a lot, even within a sector, that you have all these different subsectors. So if you were to say to somebody, yeah, I'm invested in healthcare stocks, the person should say to you, that's great. Which sector of healthcare are you in? And then you can maybe talk about individual stocks. And some individual stocks might play in lots of sectors. Johnson & Johnson, they do medical devices, but they also do a lot of things in medical around things in the operating room and some things around that. And you probably know Johnson & Johnson from Band-Aids and things that you can buy as a consumer. They make those. So It's very interesting as far as how you can break down stocks. So that's one way to diversify your holdings, is looking at these categories. And we're going to really explore that more in great detail next in the upcoming lessons. But think about, if all I own is large cap stocks, well, I might be at more risk than if I had a mixture of stocks that might be small or medium versus domestic or international. And maybe I need a variety of sectors too, so I'm not all in energy or all in healthcare. And that's the way you want to diversify your stock holdings as a subset of your overall holdings. So think your overall holdings, stocks, bonds, cash. You have your stock section, diversifying it around size, style, and sector. And that's what we're going to look at now.